Your mortgage is probably your biggest monthly expense, and most families have zero protection if something goes wrong. And I'm here with Tucker Watkins, CFP. And Tucker, so why is mortgage protection so important? And what are the options that families have out there?
Yes, thanks for the question. So my passion around protecting families comes from a personal tragedy in my own family. My father up and suddenly died at what I think the young age of 57. Sadly, he had no insurance in place. My mom got plunged into sudden financial insecurity. The only saving grace she had was that she owned a home and she had bedrooms in the home that she could rent out. So for the next 40 years, she made ends meet by renting out rooms in the house. So for 40 years, she had no privacy, clutter in the kitchen, dealing with tenants, no privacy. And she made it all the way up to age 97, which shows that longevity is out there. So longevity risk, for people who are the survivors. So my passion came from that. And my goal now is to make sure that every family has enough protection so that they don't have to go through what my mom went through. So to answer your question, then, there are two types of insurance. There's term insurance and then there's permanent insurance. And for me, as an analyst and as a certified financial planner, that brings me joy because that means I can customize a plan of protection for a family to cover the amount of the need and still make it affordable. So sometimes I'll blend together term insurance and permanent insurance. So here's a case in point that I'm working on right now. So this is a single mom. She has two kids who live in the home still, and she's taking care of an aging dad who's in the home as well. So she's the only breadwinner. And the home is worth about $550,000. There's a $330,000 loan on it. So there's about $220,000 of equity that she's trying to protect. And everybody in the family is relying on just that one income. So if there's a tragedy for her where she gets hit by a drunk driver, what happens to her two kids and her aging father? I mean, that's a scary conversation. And so she and I are customizing a plan. She can't afford permanent insurance 100%. So what we're doing is we're blending together some term insurance and some permanent insurance to bring the premiums down to where it's affordable for her. And so the benefit then to her survivors would be that all life insurance proceeds go to the heirs completely tax-free, which is amazing. Also, the new modern life insurance plans have a provision known as living benefits. What does that mean? Living benefits means that if there's a critical illness and you qualify for it, there's a way that you can pull money out from the life insurance while you're alive, which is an amazing thing. My mentor tells me the story about how he insured a cardiac surgeon, and the cardiac surgeon himself ended up with a heart attack. He didn't die, but he couldn't practice. So his income went to zero, and they were able to tap the cash value of the life insurance to bridge the gap between what his income was and the shortfall. So living benefits are really profound. I should also mention that for those plans that are structured that do include some permanent life insurance includes cash value, and you can borrow against the cash value and not pay taxes currently on it. And you can get that loan at any time for any reason. And so that's one major reason why people buy the cash value life insurance.
So what if they can't get insurance to cover the entire mortgage?
Yeah, and that's called bridging the gap. So and that's a profound question because a lot of people don't know that when we talk about mortgage protection insurance, the beneficiary is the person, not the lender. So what that means is that the person would be the beneficiary. So if the insured person passes away, the life insurance proceeds go tax-free to the beneficiary. The beneficiary can do anything that she or he wants to with the money. So if it's not enough to pay off the whole mortgage, it would give them some time to go through the grieving process, go through the process of maybe fixing up the house and getting it ready to sell without having to be a fire sale. It gives them time to maybe downsize this house and move into something smaller. But most importantly, if there's not enough money or enough premiums to cover enough life insurance to pay off the mortgage in full, it gives them time to breathe. It gives them time to mourn gives them time to plan about what they're going to do next. The worst thing you want to do is to have a mortgage, which is a debt. And remember, debt is a four-letter word, and not have insurance. Because if you have insurance, you have no options. If there's a sudden death and the parents don't, if the heirs don't have enough cash around to handle things, it can get very, very messy, very, very fast.
I'm sure people don't want that. So if anything Tucker shared today hit close to home, do not wait on this one. I know nobody likes to really think about these things, but go ahead and click on the link below or just head to tuckerwatkins.com. Book a free 30-minute Zoom with Tucker.
Yes.
He'll walk you through exactly what protecting your home could look like for your family. So thanks, Tucker, and we'll see you in the next one.
Thank you for watching.